It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, March the 17th, 2016, wrapping up this third week of the third month of the year 2016. It is Quadruple Witching Week. We'll talk about that in just a moment, but I do want to remind you this is the last newsletter of the week. We don't do them on Fridays, so the next newsletter will be on Monday evening, right? Next Monday. And of course, we had another busy newsletter in store for you guys and gals tonight. Quite a bit on the charts tonight to talk about. We get a doozy for you here. Talk about crude, S&P, gold, and euro this evening. Starting out tonight with the oil market. Crude oil is bullish with a lot more room to go higher. But we're trading at the highs of a bull channel on the oil market, which means buying up here is risky. So we're looking for some traps at swing lows below. E-mini S&P is bullish, but the completion of a triple measured move at the highs of a bull channel tells the buyers to take their profit and wait for a correction back to the channel before they buy more tomorrow. Boy, oh boy, that S&P, woo! Gold is bullish, but a failing flag pattern, I'll say that 3 times fast. We got a failing flag pattern on the gold right now telling us they may be waiting for a deeper pullback. So we're looking for some bear traps at key support levels before buying more tomorrow. And we're going to wrap up tonight with the euro. The currency future Euro 6E contract is bullish with a triangle and a trading range this evening. Very nice chart. Best chart we've seen in the euro in quite some time. This is giving the buyers plenty of locations to look for some bear traps tomorrow. Really, pullbacks are going to be key right now. We've had a few big runs this week so far. As you can see, I got a plan for crude, S&P, gold, and euro. You know how we roll here every evening in our newsletter. If you want to see the entire version of this nightly newsletter video, make sure you're watching this video on our trading blog here at Sideways Markets. If you're watching this video right now on our YouTube channel, it is just a small portion of the full-length video. There's a link right in the description of the YouTube video. It'll take you over here to our blog at sidewaysmarkets.com. While you're here watching the full-length version, don't forget to grab a free pass and come out and join me as a guest in our live trade room. In the lower left-hand corner, don't forget to register as a member of our newsletter mailing list. All I need is your name and your email address, and then check your inbox. And then every evening I'll send you an email when the full-length version is ready to be watched. You can also download all the charts that you see me using in tonight's video. You can download those charts by following that link right below the video on our blog. And then over on the right-hand side, I get this question quite a bit. Where can I learn more about the actual strategies that we trade here at School of Trade? Where can I see more about what it feels like to be a member of our lifetime membership community? By the way, we're the longest running trade room, the longest running trading education website on the planet. We've been around longer than anybody else out there. You can join the free trial membership on the right hand side. Very easy there. And of course, don't forget, whatever questions you have, we have a live support button on the right hand side. We're always here to help you guys out. Got a big day tomorrow, but it is quadruple witching. Let's put a plan together here for tomorrow, Friday the 18th. Now, don't forget, and we cover all this in our beginner's course here at School of Trade, the third week of the third month. Yeah, that's quadruple witching. It's a trader's holiday. It really is. This is one of those days of the year that we know volume will be light, really mostly because of a self-fulfilling prophecy. All 4 asset classes expire. It would be triple witching if it wasn't the third month of the year. And again, I go into a very detailed trading calendar in our beginner's course. So all of our beginner members out there should already be aware of this. We've been talking about this all week. Really, Thursday and Friday are the days where it gets really low volume. So we definitely saw lower volume today, but still a pretty darn good day out there. Tomorrow's going to be the day. Tomorrow's a Friday, so obviously it's early in, early out. What's the rule on Fridays? No entering new trades, right? No new positions after 11 o'clock. We'll definitely leave some big runner targets out there on Friday because things do get a little bit thin, and we do tend to get some big moves on Friday afternoons. But as of 11 o'clock on Friday, we're sitting on hands. Tomorrow is, again, quadruple witching. So if I had to guess, I would say about 10:30 a.m. tomorrow, you're going to be watching paint dry most likely. Hopefully I'm wrong. Boy, I never hope for that stuff. But, historically speaking, though, on quadruple witching, and this is the March quad witching, which means kids are off on spring break, taxes are due, people are still fighting that hangover from daylight savings time over the weekend, all the New Year's resolutions are in the trash can. There's a lot of reasons why this third week of the month is a big one. Then we'll go into June and, of course, September and December. This historically just remember for the record, historically, the March quad witching is always the most challenging of the year, right? Because of the stuff we talked about early. I'm a big believer that tax season, spring break, parents are out of the market right now, and of course you got that time change. Many of us are still kind of battling that hangover from last weekend. So we'll catch up on some sleep this weekend and get back to business next week. So early in, early out tomorrow. We have a 10 o'clock consumer sentiment tomorrow morning. Thank goodness, because it's probably going to need a little bit of a shot in the arm here, middle to late morning. So that should keep the price action moving. But if we're watching paint dry tomorrow morning after 10:30, that's your sign to get out of the office, right? Enjoy, hopefully, the beautiful weather we have now that the summertime is just around the corner. We've had a great week. Let's take a look at the charts for tomorrow, and we'll send you guys off here to a Friday. Don't forget, we open up our live trade room at School of Trade at 8 a.m. Eastern Time tomorrow. Look forward to seeing you guys there. Starting out with oil, we'll go oil, S&P, gold, and we'll wrap up on the mighty euro. Crude oil this evening is bullish with a lot more room to go higher. We saw this exact example on the S&P last night. If you missed the newsletter from last night, go back and watch last night's newsletter. You can skip to the S&P section because this is exactly what we were looking at right on the S&P last night, and boy, oh boy, did we get rewarded for our hard work on the S&P today. If you don't know what I'm talking about, you definitely better go back and watch last night's newsletter. Now, we have a lot more room to go higher, but we're trading smack at the highs of this bull channel, which means buying up here is risky. It's expensive. So we're looking for traps. We have a bull channel, a measured move, and a rising wedge this evening. Now, first of all, the bull channel puts us right up at the highs, and our goal is to buy the lows of the bull channel. So this is assumed to be very aggressive up here. Bull channel, drawn off the lows, up to the highs, fits beautifully, right? I mean, it lines up beautifully. Problem is, we're right at the high of that channel. And we know that in a bull channel, we're looking for a channel rotation. So right now, the channel buyers are waiting patiently. Wouldn't it just be a beautiful thing if we get this price to pull back into this area down here around the low of that channel? Even if it pulls back as far as this 40-50 area, right? It still looks great. Looking for a measured correction down to the low of that channel. And remember this from last night? What was it? Failures into strength, into pullbacks, right? Into back to the high, right? Rinse and repeat, rinse and repeat. The stuff doesn't change, just the markets change, right? This could be any market you want. It doesn't matter. It could be stocks, it could be Forex, it could be futures, right? It all works. We trade futures because futures give you leverage. They give you great tax advantages. They give you, in my opinion, the best short-term liquidity. They're the cheapest, right, to trade. I mean, the business model, if you're talking about the most efficient business model, futures is by far the way to go. The only thing that futures doesn't have is because of rollover, you're not going to want to buy and hold the commodity future, right? You're not going to want to sell and hold, right? Volatility is extreme on commodity futures. So we day trade commodity futures and, long-term invest in the stock market. We'll talk more about that on another time. Back to our plan, though. Bull channel says buy the low, and again, we look for that two-legged correction, right? Measured move down. When it does pull back on this, though, remember that little trend line is going to be your kind of thorn in your side, right? So wait for the failure, back up, right? Try to get around that falling trend line, right? That's usually going to be your biggest problem as this price pulls back. You want to get above that trend line and then use that, right, as your area of support on the opposite side. Failure into strength, into pullbacks, and then again, the target is going to be back up at these highs. Second thing here right now, the measured move has reached but didn't seem to stop the buyers, so we expect an attempt at a triple measured move tomorrow, which also lines up with a double up from this morning's opening range. A to B, C to D, it blew right through it, and then there's your, right, E to F, all the way up top there, right? Little bit clunky how it ended up measuring out here, right? You got 1, you've got 2, and then that'll put you up there to 3 for your triple measured move. Now, just a little bit of a heads up, if we do pull back a little bit further, look for this now to be its own measured move, right? So if it does pull back, if we do trap low here, look for this now as its own measured move, all right? But we do have that triple measured move waiting and a double up target overhead at 42.32. It's exactly like the S&P looked yesterday. Lastly, the rising wedge. Gives me chills just looking at it. Now, this rising wedge, in my opinion, is kind of it's not really that great to see if you're a conservative buyer, because this wedge right now tells you there's a big old bullseye right at the point of that wedge, which just happens to line up with a triple, with a double up. Again, go back and watch last night's newsletter on the S&P, and you're going to see exactly what I'm talking about. Here would be the ideal. Here would be the postcard, put it on the fridge for mom at home. Here would be the scenario you want to see. Back to 41.16, that's a prior swing high, right? Get below it, get some sellers a trap, get those lows involved, and then blammo, right back up, right, to finish off that wedge. Ultimately, what you want on this wedge is you want this sucker to wind up, measured correction back lower, and then finish it right back up to that wedge. As you can see, this market has plenty of room to go higher. That's why I said it's kind of a bummer if you're a conservative trader, because I don't want to buy all the way up here. You know what I mean? You're all up the highs. So here's what we're going to do. If price is going to go higher here, what you want to look for is the top of that channel needs to hold as support. Okay, that's the first thing, right? If we slip below that channel, it acts as resistance now. Okay, so get it above the channel, right? Use it above the channel, right? Use the channel high as support, not as resistance. That's the first thing. The second thing is that when you're buying up at these highs, buying pullbacks should be treated as very risky. So what I always try to do is rather than buying a pullback at the high, I look for traps. I look for the pullback to turn into one of those little 50% pullback, retracement areas that those new traders like to take all the time. When they try to sell it, then we know where their stops are and we can buy into their failure. What you want to do is, if the price pushes up, again, use the top of the channel as support. Whatever you do, don't buy into the high of the channel, right? Make sure you get above it and use it as support. The second thing is look for opportunities to catch sellers. So, you think about it. If price is going lower, right? And again, this will be in a real short-term time frame. Price is going lower. Traders are going to measure, right? The average new trader is going to say there's a Fibonacci area. They're going to try to sell it, right? Where their stops are. Their stops are going to be hanging out above the 618, right? So, and again, think about this now at the high of the channel. Buy into their stops, right? Because that's going to throw that price right at your first target. So now, imagine now, this is the high, right? This is the high of that channel now, right? Channel high. Okay, here's the, this is the channel. I know it's not drawn to scale, right? But there's your channel. Right? We go up above the high, and we use the high of that channel as support. We look for sellers to try to sell the top. This is why I always tell people, don't sell a bullish market. What are you doing, right? Well, you can sell a bullish market. Wear your helmet, right? Because it's not going to be reliable. So again, price goes up, right? Price goes up. Get above that channel high. Look for sellers to try to sell it, right? If they're successful, wonderful. But if they're not successful, that's going to be your most reliable way to buy that thing on the way up. Okay, what we really want is we want that measured correction down. There will be a trend line, of course, it comes over, right? So, of course, your first opportunity here is a failure, right? Into strength, into pullbacks, right? And then back up we go. Target 1 will be up at 41.71. Target 2 will be up top over here. And again, I really don't care how far this thing pulls back. I really don't. The deeper it goes back, it feels like the $50 a barrel, right, has a target on its back right now. So, we're definitely bullish. Just be careful buying these highs. If it goes higher, it's tricky up there. So look for traps to the highs. Look for seller failures to the highs. We want it to go lower, obviously. Trap low. Get some sellers involved, right? If you want to be a seller, you've got to be careful here, because you can just imagine the gig is up. Everyone wants to buy oil right now. So if you're trying to sell this thing, good luck. Wait for a new lower low and then hold a pullback. That's going to be your key, right? Because right now the bulls have control. You've got to give the bulls the benefit of the doubt, all right? And I'm talking to you. Yes, you, the one that says, well, can't we sell the high? Do you like the money in your account? Yes or no? If you like the money in your account, don't sell in a bull market. Until what? Until it turns to a bear market. When does it turn to a bear market? Lower low, hold a pullback. We teach this stuff in real time every day in our trade room. Come on, join me. All right, let's keep going. Next up, Got a good plan for the oil? How about some S&P? Boy, this S&P, a lot going on in this chart. This is going to be a good learning lesson, and hopefully a good earning opportunity for us tomorrow. The S&P is bullish, but the completion